All right, so Robinhood just dropped a bombshell of a quarter. We're talking 100% growth. But here's the thing. The real story isn't just about that flashy number. From my seat as an analyst, the real question, the one every single investor is asking right now, is this. Is Robinhood finally shaking off its meme stock reputation and turning into a real, diversified financial powerhouse? That's what we're going to dig into.
Okay, so let's get right to it. The headline number that's got everyone talking. $1.27 billion in revenue for Q3. I mean, that's a record. And it didn't just meet expectations, it absolutely smashed them.
And yet, that translates into a mind-blowing 100% growth year over year. You know, in today's market, a number like that, wow. It doesn't just get you noticed, it forces everyone to stop and pay attention.
So, you gotta ask, right? Where is all this coming from? Well, if you listen to the CEO, Vlad Tenev, he boils it down to one thing: relentless product velocity. And what he means is they are just cranking out new products and features at an incredible speed. And you can see it is absolutely working.
And that really brings us to the core of it. The multi-billion-dollar question that we have to answer. Is this just a flash in the pan, a temporary peak because of a hot market? Or is this the real deal? Is this explosive growth actually sustainable?
Okay, to figure that out, we've got to look under the hood, right? Let's deconstruct these record numbers and see what's really driving this growth engine.
Just look at this chart. This isn't just steady growth. This is an acceleration. You see that curve bending upwards, almost like a hockey stick? Hitting that record 1.27 billion? That's what an inflection point looks like on a graph.
But hey, revenue is just one part of the equation. What's really impressive is this. Net income is soaring right along with it, hitting $556 million. This right here is what Wall Street loves to see. It's called operating leverage. Put simply, it means for every new dollar of revenue, even more of it is dropping straight to the bottom line as pure profit. That's the hallmark of a fantastic, scalable business.
So let's drill down a little deeper. Transaction revenue was the big story here. And look at that crypto slice. It went up over 300% from last year. Now, that is a classic double-edged sword, isn't it? It's phenomenal for growth, but it also means they're leaning heavily on the crypto market, which, well, you know how volatile that can be. That's a key risk we have to flag.
And this isn't just about people trading more. They are bringing a ton of new money onto the platform. We're talking 20.4 times billion dollars in net deposits just this quarter. That works out to a 29% annualized growth rate. You have to understand, that's the lifeblood. That's the fuel for everything else they're doing.
And this is where the CFO, Jason Warnick, comes in. His message was crystal clear, and he kept hitting two key points: profitable growth, which we just saw, and this is the important one for the next part, diversification.
So let's talk about that diversification. How are they actually doing it? What's in the innovation pipeline that's winning them so many new customers and making the business stronger? Okay, this timeline right here, this tells the whole story. I mean, look back at 2019. They were basically a one-trick pony. One main way to make money. Fast forward to today, and they have 11 different business lines, each pulling in over $100 million a year. This isn't just a tweak, it's a complete reinvention of the company. Remember what Vlad Tenev said about product velocity? Well, this is what he was talking about. They are going hard after serious, active traders now. We're seeing things like AI scanners, the ability to short stocks, prediction markets. Let's be clear, this is a long, long way from the super simple app they started with. So is this strategy actually working? Well, the proof is right here. Look at the growth in Robinhood Gold subscribers, up 77% in a year to a new record of 3.9 million people. This is huge. It shows they're not just getting new users, they're getting their existing users to pay more for premium features. And you need to understand why that gold number is so critical. A gold subscriber, on average, keeps 5 times more money on Robinhood, and they deposit new money more often. Simply put, these are their best, most profitable customers, and getting more of them is a total game changer for the business. Okay, so the strategy is clearly working. They're firing on all cylinders. But what's next? Let's switch gears and look at the outlook. What are the big catalysts and, just as importantly, what are the risks on the horizon? All right, first let's talk risk. Expenses are going up. They actually had to raise their expense guidance for the rest of the year. Now, to be fair, it's mostly for good reasons. Paying out bonuses because the company's doing so well and plowing more money back into growth. Still, you can bet investors are going to be watching their spending like a hawk from now on.
Here's another one to keep on your radar, a leadership change. The CFO, Jason Warnick, is getting ready to retire. Now, he's been there for a long time, kind of a steady hand on the wheel through some pretty choppy waters. Even with a good transition plan, whenever you change a CFO, it just adds a little bit of uncertainty into the mix.
But on the flip side, a big positive catalyst is capital return. The company's in the middle of a $1.5 billion share buyback, and they've already used more than half of it. What that does is it supports the stock price, and more importantly, it's a huge signal from management that they believe their own stock is a great investment.
So let's tie this all together. On one hand, you've got this incredible explosive growth. You've got a platform that's diversifying and getting stronger every quarter. But on the other hand, you have rising costs and a major change in leadership coming. So this brings us back to the ultimate question for any investor looking at Hood right now. Has the market already priced in all this good news, or is this just the beginning? Is Robinhood finally the real deal, or is the execution risk just too high? The next few quarters are going to be absolutely critical.